Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. This is the last one for the week. It is June 9th. We are going to cover Dominion Energy today. They are in the energy sector. A lot of energy companies are screaming right now. Chevron, ExxonMobil. Dominion Energy is no exception. They have been up significantly. They have pulled back on the day. Let's take a look at if they are a good buy candidate or one we should throw on the watch list or avoid because they are overpriced. Let's jump right into it. So Dominion Energy, with over 17,000 people, employs 17,000 people in 13 states, providing reliable, affordable, clean energy to nearly 7 million customers. We are a leader in clean energy transition with a clear strategy to achieve net zero carbon and methane emissions. Headquartered in Richmond, Virginia, we're creating a diverse and inclusive workplace that reflects the communities we serve. We invest in communities where we live, work, and protect our natural resources. We believe actions speak louder. So they are in the renewable energy space with wind, solar, methane. So definitely one, if you're looking for something in that sector, in that space, that you might want to look at Dominion Energy. That's what they do. Dominion Energy, ticker D, closed the day at $79.34. Again, in the energy sector, down 2.28%. As you can see, definitely dropped on the day. It was up almost to $82 at one point, down to $79.34 where it closed. 52-week range as low as $70.37, as high as $88.78, getting closer to that 52-week low, but kind of in the mid-range between the two, between the high and the low. They do have a market cap of $64.366 billion, a beta of 0.42, which is less volatile than the overall market. PE ratio of 22.13, a little on the high side, even with energy being overpriced. Again, maybe look for it to pull back closer to the $70.37. That's where I'd look for it anyway. It does have a forward dividend of $2.67 paid out annually, or paid out quarterly. This is the annual, so divide that by 4, and that'll give you how much you're paid on a quarterly basis. A yield of 3.23%, so a pretty nice yield. Ex-dividend date, the last one was just this past June 2nd, so you wouldn't get the next dividend if you bought now. A 1-year target estimate, at least according to Yahoo Finance, of $89.94. So it does speak to some upside appreciation. Looks like they think it'll reach another all-time high at some point over the next year. Let's take a look at what some of the other analysts have to say. According to the 25 stock analysts from stockanalysis.com, again, not affiliated, just where I like to pull some information, they call it a buy. They have a low estimate of $75.75, so they see potentially some further pullback in the price of the stock. They have an average of $91.74, so even higher than what Yahoo Finance had, and a high of $103.95, which would be a 31.02% upside from where it currently sits. That seems a little bit high, but again, this one may be one to watch as it pulls back. If the market continues to pull back, a lot of red today actually in the market, even energy stocks like this one pulling back, that's when you know we're in some volatile times in a bear market, in my opinion. Even though we've had some run-ups lately, we are still on a downward trajectory. I don't think we're at the bottom yet. I think we've still got some to shake out here over the next year, at least through this year. Maybe next year we start to mellow out and turn it around. But these are the type of stocks I look for whenever we're in volatile times, especially in times whenever we look for recession or enter recession. Energy and utility stocks usually do better than others because people cannot, as well as consumer staples, because people cannot go without energy. It's not like you're going to turn your lights off, turn your heat or your air conditioner off and not have it. I guess you could, but most people are not going to do that. They're going to go without stuff like going out to the movies, cutting back on the discretionary spending, going out to restaurants, that sort of thing, before they cut back on their lights and their heating and cooling bills, or a warm shower, for example. So these are the type of companies you might want to watch as we enter into inflation, where we're in right now in inflationary, and potentially as we enter into recession. With that said, these are supposed to be quick hitters, guys. That's the last one for the week. I hope you had a great week. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop your comments down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future videos. And hey, if you've got constructive criticism, things you don't like, drop those in the comments down below. I'll take a look at them and make adjustments accordingly. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. We'll see you next time. Thanks for stopping by, everyone. Have a great week. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.